Hi, welcome to Curious Bricks. Today we're going to talk about NRG Energy, ticker symbol NRG, Q3 2020 earnings report. NRG is part of S&P 500 index under the utilities sector. The company's earnings call was hosted on November 5th, 2020. Since this is our first time covering NRG, we will start with a quick overview of what NRG does and how they make money. NRG has an annual revenue of roughly $10 billion. The business can be grouped into two segments: retail, which represents 80% of the overall revenue, and energy and capacity. NRG has been quite active in the M&A market and acquired several companies such as Reliant, Green Mountain, and Zoom in the last several years. The primary market for NRG retail is in Texas, although it has footprint on the East and West Coast. Energy and Capacity Group operates more of a brokerage and wholesale model, which represents roughly 20% of the overall revenue. NRG is in the process of acquiring Direct Energy, which is another large utility company with strong retail focus. Direct Energy has 4 million customer accounts across both US and Canadian market. Before we dive into the financial details, let's take a quick look at some key statistics. As of November 13th, 2020, NRG share price is $32.14, and its market cap stands at $7.8 billion. The trailing price-earning ratio is only at 2, and the forward dividend is expected to be $1.2 per share, or a 3.73% yield. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q3 2020, NRG reported a total revenue of $2.8 billion, which is 6.2% lower than the same quarter last year. Revenue decline was driven by lower revenue reported by the Texas market, as well as the energy group. For the Texas market, residential demand remains resilient, but commercial and industrial market is down due to hurricane season and milder than usual weather. In addition, the price is softer than last year. During this quarter, SG&A costs increased by $43 million as the company continues its effort on sales channel promotions. NRG also published its non-GAAP adjusted EBITDA breakdown by region. Overall, EBITDA decreased slightly, driven by reduced load in Texas market due to the milder weather and COVID-19, but partially offset by lower supply cost. Now moving to the balance sheet. NRG reported total cash and cash equivalent of $697 million, which is higher than same quarter last year. Long-term debt remains at $5.8 billion. In this quarter, management narrows 2020 adjusted EBITDA to the range of $1.95 billion to $2.025 billion and reiterates 2021 adjusted EBITDA in the range of $1.9 billion and $2.1 billion. But 2021 adjusted EBITDA is expected at the bottom half of the range due to the potential lingering effect from COVID-19. The renewable PPAs will be delayed to 2022, which affects the 2021 adjusted EBITDA outlook. Direct Energy acquisition is expected to be closed by year-end, and the management is projecting a $300 million cost synergy from the integration. NRG still targets to improve its corporate credit rating to investment grade by late 2021 or early 2022. During the Q&A session, analysts mainly focus on two areas. First, what is a broader picture of the future transformation of the company? And secondly, the potential impact related to the delay of renewable PPAs. NRG management responded with the same message that retail is still the key priority for the company, especially with the acquisition of Direct Energy. The combined business will offer a bigger platform for customers to stay with NRG. Regarding the PPAs, most of the planned capacity for 2021 will now be pushed out to 2022 due to COVID-19. Now let's take a look at NRG's stock performance before and after the earnings call. As you can see, the stock had a steady run-up prior to the earnings call, but the market reacted negatively after the earnings release. Lastly, here's the latest summary of analyst ratings of the company. There are 9 analysts currently covering NRG, and most ratings are under either buy or strong buy. If you are interested in knowing more about the company, I recommend you do an in-depth study of the company's SEC filings. Thank you for watching this video. If you like this video, please subscribe to our channel.